Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and I welcome you once again to another episode of understanding the global macro dynamics and how do we see currency pairs, going ahead from here. So first of all, talking about as we do about the domestic side, we are seeing some kind of consolidation when it comes to equity markets. Though we have found some support of on Nifty at around 18,900 odd levels. Where on the other side 19,450 is probably acting as a good resistance at this point in time. So a consolidation phase is going on, and if we put this into numbers for FPI, for November around 3,500 crores of outflows have been seen, which are small in number as of now as compared to October and September. But if we talk about the global macro dynamics, we had the Fed policy, and the Fed policy as expected was status quo. But the data points which came in after that, particularly non-farm payrolls, that came in much beyond that expectation number, which also gave the insight that probably one more rate hike which people are expecting or the markets are expecting in the month of December may not happen also by the Federal Reserve. That is why the yields cooled off from as high as 5% to as low as around 4.52%. And now again it is in the consolidation zone of 4.6 to 4.8% band. Similarly, dollar index did cool off towards making a low 3-month low of around 104.86, but finding support at around 104.80, 104.65 band, which is a technical support, and has bounced back towards again 105 half levels. But broadly for dollar index, we expect 104.65 to act as a decent support, while on the other hand 106 half levels can be tested again. If we put this into the other factors like oil, we did see some kind of cooling off around $85 per barrel. So it has been moving in a $10 range from $83 to $93 per barrel. So not much impact due to Brent on the currency pairs. Also, if we talk about dollar CNH pair, we had the exports data for China, which declined quite sharply. So again, there are concerns with respect to housing growth in China. So China still slows down, which is visible in terms of their numbers. But if we talk about dollar CNH number, it is seen consolidating around 7.26 to 7.32 band. So nothing more from these two factors, but dollar index and yields are the two major factors which are moving the dollar index and obviously the dollar rupee pair. So for dollar rupee, we expect 83.10 is acting as an immediate support. Irrespective of dollar index cooling off, we did not see levels going below that. But in case if we see a close below 83.10, we see some kind of appreciation towards 82.80, 82.90, which probably is not the case as of now. On the other hand, if we are seeing a break of 83.29, which has been holding head rocket strong, if we break that, then there are possibilities of stops getting triggered and a movement towards 83.50, 83.60 levels also. For exporters, my suggestion would still remain these are decent levels to hedge, not try to catch the top in terms of getting maybe 83 half, 80-60. Find these levels, hedge in staggered manner. For importers, there are a couple of opportunities towards 83.05, 83.10. We can start some portion of hedging from that perspective and taking the less forward premium as a useful tool for us at this point in time. So that's all from my side, friends. Look forward for the next week as well. Wishing you all a very happy and wonderful day and weekend. Thank you so much.